This kid, with seemingly nothing more than a sharp mind and an internet connection, managed to send shockwaves through the very heart of global finance. From the quiet confines of his unassuming bedroom, a place more typically associated with video games and late-night snacks than high-stakes trading, he orchestrated a market event of unprecedented scale. In a mere 36 minutes, a blink of an eye in the relentless churn of Wall Street, he wiped out an astonishing $1 trillion from the stock market. This wasn't a gradual decline or a market correction, it was a sudden, breathtaking plunge that left seasoned investors and financial institutions reeling. The fallout was immense, triggering widespread panic and forcing the titans of Wall Street into a desperate scramble to understand what had just occurred. For years afterward, a veil of carefully constructed explanations and outright lies was spun to protect the fragile confidence of the public and the intricate workings of the financial machine. This is the incredible, almost unbelievable, story of how a seemingly ordinary gamer nearly pulled off the biggest trade in history, exposing the vulnerabilities lurking beneath the surface of the world's most powerful markets. The trajectory of Navinder Sarao's life offered few hints of the financial earthquake he would one day trigger. His beginnings were humble, far removed from the opulent skyscrapers and bustling trading floors of the financial district. He spent his formative years in close proximity to the roar of jets taking off and landing near Heathrow Airport, a world away from the hushed intensity of trading desks. By all accounts, Navinder was a quiet child, more comfortable in his own company than in large social circles. He navigated the complexities of childhood with a reserved demeanor, making few close friends along the way. Amidst the ordinary routines of growing up, one singular passion ignited within him: gaming. More specifically, the intricate and competitive world of the FIFA video game series consumed his attention and became the focal point of his early interests. Within the digital realm of FIFA, Navinder Sarao possessed a rare and potent skill. An almost preternatural ability to hyperfocus. He could immerse himself in the minutiae of the game, dissecting its mechanics and obsessing over the most minute details that often escaped the notice of other players. This intense concentration allowed him to achieve remarkable feats within the game. He ascended through the online rankings, eventually placing himself among the top 200 FIFA players in the entire world, a testament to his dedication and singular focus. His strategy wasn't based on flashy maneuvers or brute force, instead, it relied on a meticulous study of his opponent's patterns of play. He would patiently observe their tendencies, their predictable moves and strategies, and then, with calculated precision, he would execute the exact opposite, exploiting their ingrained habits to his advantage. This early mastery of pattern recognition and strategic deception would unknowingly lay the groundwork for his later exploits in the far more complex arena of the stock market. The trajectory of Navinder's life took an unexpected turn during his college years when a chance encounter with a roommate opened his eyes to the world of trading. The fast-paced, numbers-driven environment of the financial markets immediately captivated him. He became utterly obsessed, spending countless hours glued to trading platforms, absorbing information, and attempting to decipher the seemingly chaotic fluctuations of stock prices. Within a matter of weeks, his newfound fascination had transformed into an all-consuming activity, and he began trading with a fervor that bordered on obsession. Unfortunately, his initial forays into the market were far from successful. Like many novice traders, he learned some harsh lessons, and the majority of his student loan money quickly evaporated into the volatile currents of the market. However, rather than being discouraged, Navinder viewed these early losses as a necessary tuition, a costly but invaluable education in the unforgiving realities of the trading world. Despite his initial setbacks, Navinder's persistent interest and burgeoning understanding of market dynamics eventually led him to a position at a London-based trading firm. Here, he specialized in a high-frequency trading strategy known as scalping. This intricate technique involved executing a large volume of extremely rapid trades, each aimed at capturing only the tiniest of price movements. The profits from individual trades were minuscule, often fractions of a penny, but the sheer volume of transactions could accumulate into significant gains over time. Navinder's success in this demanding field wasn't attributed to luck or aggressive risk-taking. Instead, his secret weapon was a combination of unwavering patience, an innate ability to recognize subtle market patterns, and an almost robotic precision in his execution. He honed his skills, meticulously analyzing market data and developing a keen sense for the fleeting opportunities that arose and vanished in milliseconds. However, his keen observation skills soon led him to notice a disturbing trend: the presence of larger, more established traders who appeared to be manipulating the system to their advantage. Navinder's sharp eyes began to detect a pattern of deceptive behavior employed by some of the larger firms operating in the market. He observed a tactic known as spoofing, a manipulative technique where these powerful entities would place massive orders for stocks, creating a false impression of significant buying or selling interest. These orders, often numbering in the millions of shares, would be displayed on the market's order books, enticing other traders to react accordingly. However, at the very last second, just before the orders were executed, they would be abruptly cancelled. This deceptive maneuver would artificially inflate or deflate the price of a stock, allowing the spoofing firms to execute their actual trades at a more favorable price. For a scalper like Navinder, who relied on the smallest of price fluctuations, this manipulative tactic was particularly damaging, effectively undermining his carefully calculated trades and eroding his potential profits. He watched as these larger players seemingly bent the rules with impunity, and a sense of frustration began to brew within him. Fueled by his frustration and a growing conviction that the system was rigged, Navinder decided that the only way to compete was to beat the large firms at their own game. Leveraging his technical aptitude and his deep understanding of market mechanics, he embarked on a clandestine project, building his own sophisticated trading bot. This wasn't a simple automated trading program. It was a carefully crafted piece of software designed to mimic the very spoofing tactics he had observed. Navinder's bot was programmed to place enormous fake orders, flooding the market with phantom buying or selling interest. This deluge of artificial orders was specifically designed to trigger the algorithms of other high-frequency trading bots, tricking them into believing that a significant price movement was imminent. As these automated systems reacted to the fake demand or supply by initiating panic selling or buying, Navinder's bot would swiftly cancel its deceptive orders and simultaneously execute real trades, profiting from the artificially induced price swings. In a matter of minutes, using this audacious strategy, he was able to generate profits that dwarfed the value of his parents' modest home, demonstrating the immense potential, and inherent risks, of his carefully constructed weapon. Next. The date of May 6, 2010, would forever be etched in the annals of Wall Street infamy. On this particular day, Navinder Sarao decided to unleash his most audacious and potentially devastating trading maneuver. From the unassuming setting of his suburban bedroom, he launched his trading bot with instructions to flood the market with an unprecedented volume of fake orders, totaling hundreds of millions of dollars in notional value. The effect on Wall Street's intricate network of automated trading systems was immediate and catastrophic. The sophisticated algorithms, designed to react swiftly to perceived market forces, went haywire. They interpreted the massive influx of fake orders as a genuine and overwhelming wave of selling pressure. Without the intervention of human oversight, these powerful bots began to automatically dump vast quantities of stocks, triggering a cascading sell-off of epic proportions. In a breathtakingly short span of just 36 minutes, an astonishing $1 trillion, a sum almost incomprehensible in its magnitude, vanished from the collective value of the stock market. While the financial world descended into chaos and panic gripped the trading floors of Wall Street, Navinder Sarao remained remarkably composed. In stark contrast to the turmoil he had unleashed, he calmly sat down to eat dinner in the familiar surroundings of his parents' kitchen, seemingly oblivious to the pandemonium unfolding thousands of miles away. Meanwhile, his carefully crafted algorithm continued its relentless work, printing money with each artificial price swing it orchestrated. In under an hour, this quiet gamer from Hounslow had amassed an astonishing $800,000 in profit, a staggering sum achieved through a combination of technical brilliance and audacious manipulation. Remarkably, in the immediate aftermath of this unprecedented market event, nobody suspected the unassuming trader operating from his suburban home. For years, Navinder continued to trade from his bedroom, amassing a fortune that would eventually reach an estimated $65 million, all stashed away in offshore accounts. He lived a surprisingly low-key lifestyle, eschewing flashy displays of wealth. He continued to ride his cheap scooter, a stark contrast to the high-rolling image often associated with successful traders. His anonymity remained intact, a testament to his quiet demeanor and the seemingly improbable nature of his actions. Next, the quiet life Navinder had meticulously maintained came crashing down in 2015 when the long arm of the law finally caught up to him. The FBI, after years of investigation into the mysterious flash crash of 2010, finally pieced together the intricate web of trades that led back to the unassuming trader in suburban London. In a dramatic turn of events, federal agents raided Navinder's parents' home, the very place from which he had orchestrated his market-shaking trades. He was arrested and subsequently faced a staggering 22 criminal charges, each carrying the potential for significant prison time. Suddenly, the quiet kid from near Heathrow Airport, the avid FIFA gamer, was thrust into the harsh glare of the international spotlight, becoming Wall Street's public enemy number one. The financial establishment, still smarting from the embarrassment and the exposure of their market's vulnerabilities, painted him as a villain, a rogue trader who had single-handedly brought the system to its knees. However, beneath the sensational headlines and the vilification, a more nuanced truth began to emerge. Inadvertently, through his audacious actions, Navinder Sarao had exposed a deeply flawed and potentially corrupt financial system. It was revealed that the very spoofing tactics he had employed were not unique to him. In fact, large Wall Street firms had been engaging in similar manipulative practices for years, albeit on a less dramatic scale. Navinder's mistake, if it could be called that, was not in introducing manipulation to the market, but rather in beating the established players at their own rigged game, and in doing so, revealing the fragility of the system to the world. His actions, though illegal and disruptive, served as a stark reminder of the potential for abuse within the complex and often opaque world of high-frequency trading, and they forced a long-overdue conversation about market regulation and the need for greater transparency. He inadvertently showed the world just how vulnerable the seemingly impenetrable fortress of the stock market truly was, and how a single, determined individual with the right skills could exploit its weaknesses in ways that few had ever imagined.